This is total growth investing, where price growth is not enough. Dividend growth is not enough. We want to find stocks that grow in both of these categories. And if we can find them, we can beat the market. This series of videos will be doing a basic review of the top stocks on my total growth investing ranked watch list. I have 673 stocks on that list, and I want to focus on the top 10. I want to give a quick shout out to Dejan Mack. Watching his video on the top 5 stocks to buy now in June 2020, part 2, he reminded me that I need to put out a disclaimer. I am not a financial advisor. Anything I say on this YouTube channel should not be seen as financial advice. This is my opinion based on what I'm seeing on websites and other places. Your strategy is your strategy. Do your own research, do your own due diligence. Good luck. I don't know about you, but I love surprises most of the time. In my last set of updates to my total growth investing ranking list, FMC Corporation floated to the number 10 spot, and I thought I would research that one next. FMC Corporation, which stands for Food Machinery Corporation, was started in 1883 in Los Gatos, California, by inventor John Bean to sell the pumps that he was building and selling to farmers to spray insecticide onto the many fruit orchards in his area. They are currently headquartered in Philadelphia, Pennsylvania. The company manufactured amphibious tracked landing vehicles during World War II, and up until they spun off FMC Technologies in 2001, they were also in the energy, airport, and food equipment business. Their most recent major realignment was in September of 2014, when FMC announced it was acquiring multinational agrochemical maker Cheminova AS and would sell off the alkali chemicals business to reduce debt related to the company's pending acquisition. In February of 2015, Tronox Limited signed an agreement to buy alkali chemicals for around $1.64 billion. Mergers and acquisitions and spin-offs abound over 140 years of history, and it hasn't stopped. In May of this year, FMC Corporation announces new intelligence platform, and just a week or so before that, FMC Corporation to acquire, I'm not even going to try to pronounce that. This is the way business works. They also have at least 4 Superfund cleanup sites within the United States: Idaho, Minnesota, Washington State, and New York State. This is how the chemical business works. But they're working to clean it up. Their current major product lines include agricultural and non-crop chemicals, pharmaceutical and nutraceutical, and lithium. Now, I'm not a chemist. I'm not even going to pretend to be one on YouTube. Most of what I've been reading, I don't even try to pronounce, and you can make fun of me when I do. But that last one caught my attention. Think lithium-ion batteries, which are all the rage in the electric vehicle and power grid batteries market. FMC is one of the largest suppliers of lithium. First impressions. The stock price is $103.21. That's a solid price, and they have recovered from the COVID-19 dip rather nicely. Are they a household name? In the agricultural sectors, yes, very well known. Who are their customers? Well, there are many. I could just scroll down. 3M, Ecolab, Clorox, Johnson & Johnson, Sigma Labs, all of the giants from all over the world. Their current market capitalization is $13.36 billion. They are in the materials sector, and their industry is fertilizers and agricultural chemicals, and lithium. Let's look at price growth over 10 years. They had a dip, and I did a little reading and found out that they had some pretty disappointing earnings. We'll talk about this a little bit later. Dividend history and growth. They had some stock splits, but they've been pretty steady per share. And they had a major boost right here. Their next dividend, which was announced on April 28th, is for 44 cents a share. It's in line. Forward yield 1.95%, and the ex-dividend date is June 29th. Yield on cost has been going up over time. So if you bought it 5 years ago, you're currently getting 3.59 yield on deposit. And if you look at the graph for all time, you're currently getting just over 40%. Total return? Well, this goes all the way back to the early 90s. Here's that dip that we saw earlier, which I will talk about. Total return to the max, 2,877.63. Let's bring that up on Seeking Alpha. So I want to bring FMC Corporation and Tronics. Remember them? Tronics is the company that bought Alkali from them. And you can see about the same time period here, January 2014 is when FMC hit a peak, and then they had disappointing earnings for a while, so the stock price declined. Tronics had the same fall. But where both of them rose between January 2016 and 2018, FMC kept going. Tronics has other issues. They're still in the acquisition business. FMC is now focused and doing well. Let's look at dividends. Current forward yield 1.71. Payout ratio is nice and low. 27.75 gives them plenty of room to grow. 5-year growth rate 25%. Now this says only growing over the last 2 years, but we've already seen the history. It's actually been growing a lot longer than that. They just had a hiatus for a while. Yield on cost, we've already seen. Let's see what that number is. 42.43. Not bad. Let's look at total return. Here are the numbers. They beat the S&P over 10 years. Let's see that in graph form. There's that dip. There's the rise. And then they kept going. And again, here's the COVID-19 dip, and they've almost recovered. The dividend is low, but still not too bad. Now let's look forward. Let's bring up FMC on dividendstocks.cash. Dividend stability, 0.89. Earning stability, 0.53. Well, we've already seen that a little bit. I'm going to change the layout so that we can see that. This was their big merger and acquisition time. Their earnings per share went a little wonky. They restructured debt, had a lot of one-time costs. So that's not quite fair. Cash flow stability, 0.48. Same thing. Let's look at cash flow. So their cash flow took a major dip. It's back. But look at the future. I'll get back to that. Revenue stability, 0.9. That's better. Let's look at revenues and margins. So the revenue is actually pretty steady. They just had a lot of extra costs associated with the spin-offs. Gross margin, operating margin in the brown, and net margin. It's pretty steady going out into the estimates. How about debt? Debt ratio has been pretty constant. That's nice to see. Here's their price movement. Week, month, quarter, half year, all the way out to 15 years. All green. Let's see what that means in terms of valuations. So because these go negative, the fair values kind of start down here. The black line is the price. The green line is based on earnings per share. Dotted brown, based on adjusted earnings per share. And the tan, based on operating cash flow. Look what happens. All three of those are going up because the company estimates that their revenue is going to do really well. But they're sitting right here. Are they overvalued? If you look at today, maybe. But let's buy here and plan to sell at the end of 22. What does the estimate say that means? If you put 1,000 in, you get capital gains of 627.32. That's not bad. What if it reaches this point? So from here where it is now, all the way up to here, that's capital gains of 810. FMC, an agricultural sciences company. I think they're going to do well. What do you think? Thank you for watching. If you liked this video, please click the like button and subscribe to the channel. I'll be doing more reviews like this of my top-ranked total growth stocks over the next few weeks. And I also have some guests planned with other ideas that you can use to beat the market over the long term.